Hi everybody and welcome to Markonomics 101 presents Hoot Loot, another exciting episode, another exciting show. We are going to take you through the turn from a bull market of 11 years to the coming bear market, and we're going to show you this slow turn today. We also have some surprises for you. Please like and subscribe. We've been getting lots of letters in and questions in. We appreciate it. We love you. So if you'd like and subscribe, today's show is called "Is it the best of investing times or the worst of investing times?" Yes, I know we borrowed a line from Charles Dickens, and here I am at the New York Stock Exchange right there because I want to know, is it the best of investing times or the worst? Find out in just a minute. All right, welcome back. It's time to go to the charts, and I want to thank you all for tuning in. This is very, very important time in the marketplace. We are undergoing what we called 3 or 4 months ago a seismic shift. We're going to tell you a little bit more about it. This could also be called the seismic shift part 2 if we wanted to, but we're going to call it the best of times for investing or the worst of times for investing, because it sure seems like there's a difference of opinion of that, and we're going to come down on the right side as we always do, sort of. All right, so let's start with the Dow. What you notice with the Dow here is that we are still in a compressing, a bearish ascending wedge. That is not good news for the Dow, and I'm going to show you some other things that are starting to break down. If you recall last time, things looked actually pretty good, and now things are starting to fall apart slowly. Apple was the first one that fell apart, and all of a sudden several others are joining it. There are definitely cracks in the ice, and all I can do is show you what the hell's cracking, and hopefully you'll understand that this is a time to take action, not a time to watch if you are invested and you are at risk. Okay, so let's go on to the Nasdaq. The Nasdaq, and this is one of the reasons right now that I think this is an urgent time for you to really pay attention to what's going on here. The Nasdaq 100 has been the leader in the bull market the entire way. It's the last one to have the dot-com bubble of 1999, and boy, are we looking just like that, except worse. Now, if you look at the Nasdaq here on this particular chart, it broke its trend channel. So it's leading on the downside potentially as it did on the upside. Other indices have yet to follow, but it looks like they will. So let's keep on going here. There's the S&P 500, real close, kind of bounced off that line. I don't know how long it will hold it. Okay, I really don't, because it holds an awful lot of big cap companies, and those are the ones that are going to lead the way on the way down, should we have a way down, and I'm going to make that argument that we will indeed. All right, here's one of the few areas of remaining speculative interest, the S&P Small Cap Index. This has continued to do really well, but it also shows these are these are the more speculative companies out there, and when people start to speculate like they are, like crazy, and I'm going to talk about some of that idiotic speculation going on, it's time to take your money off the table. Remember, take your money off the table before the table takes your money off of you, okay? That is something everyone, me included, needs to follow. I need to understand that's part of emotional discipline. The Dow Jones Transportation, what you see here is, first of all, it's a very important group because the Dow Jones Transportation is about as indicative of the economy as can be, as retail and transportation, not only goods bought, but goods shipped. So that's why this one's important. It includes rails, planes, ground shipment like UPS, and truck fleets. Now, this one is a very complicated chart, and I'm sorry to complicate it, but the reason this chart is so important to complicate is because you've got something very rare in here. That would be two reverse waves inside of each other. A reverse wave is a pattern of higher highs followed by a series of lower lows, like a megaphone. So it expands out kind of like that. So what happens is that this indicates that there is, almost like people rushing in, rushing out with greater amplitude. Sometimes, and I've shown this with the S&P, it's all because of the Fed slamming on the brakes or putting on the accelerator, either or, and they have made all cycles become greater than they would be otherwise. At least that's what it appears to me. So with that let's move on to now the yield on 10-year treasuries. This is the stuff I've been talking about, and this is the stuff that is so important. Treasuries at 10 years are at 1.4%, and they used to be at 0.5%. They don't belong at 0.5%, but imagine how much of a move that is. From 0.5 to 1.4, that's like going from 5 to 14, the same kind of math. So, what you're looking at, and you're looking at an acceleration here too. I'll tell you, I'm going to show you the next one here. The 30 years even worse. Look at that. It looks like it's a freaking technology growth stock, and it practically is. What does this all mean? This means that Jerome Powell is going to start having to raise interest rates very soon. He is the chairman of the Fed, and right now the market is telling him, "Hey, dude, you're way under a little bit." What's that? Oh, hi, Jerome. I didn't know you'd be calling. I was just talking about you. Yeah, no inflation, and interest rates are fine, and the economy's fine, and you don't need to do a thing. Okay, I'll make sure and pass that on to everybody. Okay, yeah, all right. Okay, all right. See you later. Bye. Okay, that was Jerome Powell. He doesn't think there's any inflation. I think we will disagree here in a minute. But interest rates are going up, and the reason they're going up is because the Fed does not have control of the currency anymore. Plain and simple. They do not want this right now. If they wanted this right now, they'd cause it to happen right now. The fact of the matter that it's going up so fast and that it keeps going up at this rate of speed is indicative of a financial problem of some kind that I'm not sure of what it is yet, but someone's leveraged in a really bad way, and that's why we're seeing this. It almost always occurs when you see these kind of moves. Someone has panicked to get the hell out because they're basically leaning the wrong way. And unfortunately, this thing looks like it's going to go a lot higher. I mean, we've had interest rates come down for 38 years since 1982, 39 years. Okay, straight down, 39 years. So they went all the way from about 20% under Paul Volcker in 1982 to zero. They stayed at zero for 10 years. I don't know that was such a good idea. That's like shoving a beach ball underwater and hoping it stays there. It won't stay there. It'll eventually go up. Anyway, so this is the security that I really want to recommend as a hedge. It's called the ProShares Ultra Short 20 plus years. Notice that this security has gone up all the way from 14 to 21 in 6 months. You'd had a 50% gain by being short long treasuries. This thing potentially has a long way to go because long-term treasuries are still at about 2.3 or 2.4% or 2.2. It'll be very unlikely that we will see them stop before 4 at this rate. I just don't know. If you look at the inflation stuff that we're about to show you, you're just going to have a moment like I did just when I saw it. All right, U.S. dollar index, again, it's sort of stabilized for the moment, but it's at really low levels, and I'm not sure how much longer it can stay here. We'll see. But, this is... You can't have record budget deficits, record stimulus, record printing money. It isn't a record, I will tell you that. I've looked at some of the money supply numbers, and they're just exploding off the chart. So these dollars aren't going to be worth as much. Not too far, not too distant future. Okay, I want to talk about the Bitcoin trust here. I know Ace. He doesn't like Bitcoin. I know he hates Bitcoin. He thinks it's fake, but whatever. Now, the Grayscale Bitcoin Trust is basically like an ETF by the Winklevoss brothers, who own a good chunk of Bitcoin. Now, what's important about this chart is a couple things. One, I put in there all bulls and no bears means. Okay, well, that's a question. What does it mean? It means that everybody is in love with Bitcoin, and it means that it can't go up. I was talking to somebody the other day about that, and I said, do you know anybody that is negative on Bitcoin? No. Well, I am. I must be the only person that's negative on Bitcoin, because some people are doing some awfully incredible things with it. MicroStrategies, which is, they just bought something like 1 billion Bitcoin at $52,000 a piece. This thing, Bitcoin, may or may not go up. Everybody thinks it will, but it may or may not. Everybody thought it will in 2018. It went down 85%. It has had several 85% drawdowns in its history. This would be the 6th. And I expect it's going to have another one from wherever it does top. It may have topped right now because literally I don't know who's left to buy it. When people are buying, when companies are buying it, speculating in it, that are operating companies that do things other than speculate, all of a sudden they think it's a sure thing. That tells you something because there's no sure thing. All right, so I'm going to answer the question again. How does Bitcoin have value? We asked that we answered that on last show, asked that a couple shows ago, and I don't think there's a real good understanding of it. And I want to make sure that everyone out there knows exactly what they're purchasing. You are not purchasing anything tangible. Bitcoin has no tangible at all. You can't even put it in a trophy case. You can't flip it up, and call heads or tails because it doesn't exist. It's a bunch of code. It sits in a wallet. If you lose the password, the Bitcoin is lost forever. And about a quarter of the Bitcoin has been lost forever because of that. It's sitting in landfill somewhere, or somebody's wife threw out a guy, threw out a guy who was cheating cell phone or something like that, and was sitting millions of Bitcoin in there. Well, oh well, too bad. But this particular thing is again a sign that there is some stress on the economy, but it's gone too far. So be very careful when everybody thinks something's going up. Okay, there's no one left to buy. You have to understand that. You have to go against the crowd. It's the hardest damn thing to do. Would I short this thing? No, of course I wouldn't short this thing. But would I buy it? Not in a million years. Not like this. You can't buy high unless you sell to a greater fool. Okay, so now we're going to start talking about inflation, and inflation is just such a killer. It is basically the pin to all the bubbles that are going on right now. And this is the Commodity Research Bureau. This is the probably the longest running, most comprehensive basket of commodities there is. And look at the way this thing has just soared in the last several months, and it is almost at 5-year highs. Almost at 5-year highs, and it shows no sign of slowing down. Unleaded gasoline, look at that. And again, you heard Jerome Powell. You heard him say no inflation, right? Well, I don't know what graphs he's looking at, but he ain't looking at mine, I can tell you that. Jerome, I told you to subscribe. Please do. All right. Crude oil, there's another reason right here. Look, crude oil has gone from $7 to over $60 in less than a year. I mean, that's like that's a huge gain, 800% gain. It's now trading where shale oil is very likely to be able to start to cut into the price. I don't think we're going to see the oil go up, except in this instance. If the dollar continues to go down, oil may go up because it's worth more or the dollar's worth less. But typically at a stable dollar, this is around the area where shale oil becomes competitive, and the major oils and the major crude, it kind of stabilizes there, supply and demand. Copper miners, very much correlated to the economy. Look at that, just out of control. The economy is overheating. I'm not sure where it's overheating exactly, but I'll tell you this, home building is one of them. Copper and lumber are going through the roof, and that's why home building is going through the roof, and real estate is going through the roof. And we're going to show you a little bit about that coming up. All right, so here's gold. I love gold, but gold does not love me, apparently. It's still hanging in there. I honestly don't entirely understand why gold has not participated in the dollar weakening, but I suspect it has a lot to do with Bitcoin and the speculative money that has gone into other areas. Bitcoin's now has a market cap of $1 trillion. So, gold is kind of stodgy by comparison, doesn't go up as much. But, it's still hanging in there, and I still do believe that we will have an amazing buying opportunity, just not right now. It could happen down the road a little bit, but not now. Silver, on the other hand, slightly better. It's a better value. It seems to be holding up better, but it's not really ready to move yet. And you can tell that by looking at some of the miners, like right here. The miners, some of them have actually broken down and look terrible. Some look okay. I'm not sure what to make of it, but it doesn't give me a lot of confidence that this is a low risk time to buy. All right, so now we're going to go to some of the main stocks, and why all of a sudden we've determined that this market is starting to tip over a little bit. This is Apple, Notice that Apple has broken out or broken down. We mentioned that on the last show. It was leading everything. It's just a slight little pierce of the trend line. Apple again. I want to reiterate this. This is a bubble. This is a mania. All these people here trading stuff are trading stuff at unreasonable values. Okay, and here's one of them. Apple, $2.4 trillion. All but only 7 economies have a greater GDP than Apple's market cap. That is a mania. Okay, that is a mania. When things get to unsustainable, unsupportable type prices, and it is just pure speculation, emotional. That's where we are, and that's why you've got to be really careful here. Okay. All right. So Amazon, that's now broken down. Last week it was in the plus column. Now it's in the minus column. It's a retailer. That's also not good for the economy. Facebook, it's still not quite broken down, but it looks like it will. I'm still going to give it a neutral. And, I'm not going to talk about the fact checkers this week. I've kind of given up on that. But we will be checking some other facts at some point. Okay, Google is the strongest of them. I would still call this positive. It's made an island top, as you can see. And, literally, if Google gapped down, say tomorrow morning, it would trap a whole bunch of investors in that island. And it would all of a sudden start feeding upon itself. So, this is one that, can only go up for so long. I mean, that's part of the problem here is they've been going up so far, so fast, so long that they're due. They're just due to get hammered. All right, Microsoft also, it's curling over a little bit. And this one looked pretty good. This one is still on the plus side a little bit, but it's not really on the not much. It's more neutral than plus. And again, I think this one has a chance of going down with the rest of the market at some point. Okay, Nvidia makes gaming chips, and believe it or not, they make chips for cryptocurrencies and cryptocurrencies miners. Those are the guys that crunch all the numbers, that process all the cryptocurrency trades. It's kind of complicated, but they make chips for that. So all of a sudden, cryptocurrencies have become all the rage. They're never going to go down. There's no amount of money that's too much to put into them. And Nvidia, I have a feeling, is they benefited from it. Now they might not. Qualcomm is the 5G chip rollout company. Here's another one, just broke its trend. And again, this is what I'm talking about. Companies are basically breaking their trends, and one by one. So next time we're back, like maybe Saturday, you might see even more of the companies looking bad, and all of a sudden we're looking actually at the market having turned down really, really officially with other indices and sectors. Oh, Tesla. I love talking about Tesla. Oh, Elon is supposed to, it's 420, isn't it? Let me see if he's going to, well, actually, let me see. Actually, I'll call him. All right, here we go. All right. Elon Musk, please. It's Marko. Marko Bujic. What do you mean? What do you mean he's never heard of me? Well, the hell with you. All right. Well, anyway, Elon is really pissed at me. So, Tesla has made a rounded top, and it has a lot of exposure. The company's value is very hard to determine. Lots of competitors, but it's really got too high. When it was at its peak, it had all but 15 countries. It was worth more than all but 15 countries' GDPs. So that tells you when a car company is selling 500,000 cars a year and it's suddenly worth more than everything but 15 countries' GDPs, well, that's a little out of there. So, and then you got him, he's in a bad mood. So what are you going to do? Okay, Costco also broken down. Here's another retailer which made a rounded top, which is a very good formation. What a rounded top is, it's like throwing a ball. You throw a ball up and it kind of makes a parabola. It kind of goes up and down. Well, a rounded top is basically trending up, but at a decelerating rate. And you make a little top like that, and that tends to be very good, especially when it breaks through the support level like Costco just did. So that's not a good sign for the economy, not a good sign for anything. FedEx, same thing, not a good sign for the economy. Home Depot, same thing. I haven't put this one in before, but I know this is today. Not a good sign for the economy, it just broke down. Healthcare sector, again, Not a good sign for the economy when the 1/6 of it is healthcare and it's breaking down. Oh darn, I guess we must be getting all well. Oh, what a shame. We're making so much money pretending to be sick. Okay, Nordstrom's also is making a rounded top. And Nordstrom's is the fourth and a half retailer. There aren't any left really. And this one looks like also like it's about to enter a period of soggy sales. Target, it's close to turning bearish. It's still kind of bullish, but it's like right there, right at the line. And what you're seeing is companies breaking down more than breaking up. I'll show you a few that are breaking up, but most are breaking down. And that's why I'm starting to tilt bearish more. And we'll follow it in ensuing weeks. UPS also rounded top. This one, between FedEx, UPS, these guys are transporting everything just about that are goods. So that is not a good sign when you have your transportation companies not really transporting a lot. Walmart also broke down, another retailer. So, retail just does not look good. Transportation of goods does not look good. I'll tell you what does look good. The airline index. Have you ever seen anything as dumb as this? Okay, I've got to tell you, this has got to be the dumbest thing I've ever seen in my life. Why? Look at this thing. The airlines are like breaking out and soaring as if somehow the news for them was good. Okay, now let's just say that. Let's just say that the flu was completely eradicated tomorrow. Okay, would the airlines be worth what they were worth at their last peak? In other words, if all the traffic came back, maybe, but maybe not. And they're already trading at pretty much their old peak with half the traffic, half the route structure, a lot of people not wanting to go on, a lot of restrictions, and all kind of mutant variants out there. If there's one thing I hate being called, it's a mutant, and a lot of people do call me a mutant. But I don't think these flus like it either. But I'll tell you this. American Airlines is burning through $100 billion a month, and that still is trading at like $30 or $40. So this one absolutely slays me, but you can't short this thing because it's going to just fly in your face. It could be, for all we know, this could be a short squeeze going on, because otherwise that's, when something goes up and there's really no reason, a short squeeze is something that that you go to that as an explanation possible. I don't know, but I just find this an amazing chart. The bank index, they are leading the market. As long as banks continue to do well, they are going to, they're going to help prop the Dow and keep the market going. But they don't have much longer to go. They're already pretty high at this point. The broker dealer index, oh my God, this thing looks like just flying to the moon. It's like, but then I don't know what to say about it. Other than the fact that, there's the expectation of a big calendar of investments, including Elon's SpaceX, which is going to take us all to Mars, $74 billion worth. And, I did, when I was talking to Elon, or when he was talking to me, I did ask him, about porta potties on Mars. First I asked him about 5-star hotels. He said he hasn't built any, but he has a deal, with Best Western to start putting one up there. And I said, where are the Best Western people going to stay when they're building the Best Western hotel? He says, I don't know. Okay, well, Elon sometimes he doesn't have good answers. So, all right, big oil. Big oil is all the rage now. What we're seeing is the seismic shift we talked about earlier into commodities, into hard assets like oil. Anything that's tangible is a hard asset, okay? Anything that's a piece of paper, like a stock or a bond, that's paper. Currency's paper. Oil may be a stock, but oil is tangible, and oil will go up if the dollar goes down, and this is a dollar down play, I believe. But right now it has made new highs, and a lot of the major components like Chevron and Exxon are doing really well right now, and at some point we'll probably see shale oil get back into it, and then people lose their shirts in shale oil once again. Okay. Big Pharma. Actually, Big Pharma, like the healthcare sector, is starting to break down, and they're not looking that good. It made a 5-point reverse wave. That's again a bearish pattern, and they've started to come down. And so I would, my expectation is that Big Pharma is coming down. What you're seeing is, some groups that are commodity-based groups do well, and other groups that are not do poorly. And that's the seismic shift we were talking about many months ago. People called that the reflation trade now. Well, yeah, now. All right. Net, the healthcare sector also breaking down, and that's just, that's really big. That includes hospitals, it includes biotech, includes everything. So this is this is very significant for the economy. The Dow Jones REIT index, this is one of the bright spots. Real estate. People wonder what's going to happen in real estate in this environment with interest rates going up and all that. Well, here's an indication that real estate is actually going to do quite well because it's a hard asset. And a hard asset is something like where I am right now. I'm sitting on something that's a hard asset. It may not be worth much. But real estate itself is also an anti-dollar play. And if you haven't fixed your mortgage yet, time to do that, okay? Seriously, because rates are going up. It is going to put some pressure on real estate, but the dollar will make real estate worth more. And these are some of the companies that we picked out that just kind of looked interesting to us. Boston Properties, just about to break out and turn bullish. Brookfield Asset Management just broke out and turned bullish. Equity Residential Trust just about to break out, or just has broke out and turned bullish. National Retail Properties, this is a mall owner of retail stores, turned bullish. And then finally, we've got Public Storage, and that one has turned bullish. So, these are good because they give good yields. They're tax favored, and rents tend to rise over time, so they get more rents from their tenants, and most of it goes to the shareholders. So it's a good way to play real estate if you don't own a home. And Simon Property Group, another good one that I think is worth it. Okay, so now I'm going to take the part where I have to eat humble pie. Last week, we talked about what a good setup some of the cannabis stocks were, and they were. And I'm going to state right now, they were good setups. We put stop limits in there. It's important to put stop limits in there, and we did about 7 to 10% below where the stock was trading. We got stopped out of everything. So even though they kind of bounced back up today, we got stopped out, and you just can't. You have to just not beat yourself up over going, that there's no good that comes of that. But I'll show you some of these. Kronos, another one, we've circled them, got stopped out, but Cannabis, these are all long-term buys, by the way. There will be a time to buy into these. It's just not now. It's just not now. And we have Tilray, my favorite, got stopped out of this too. I expect I'll be back in it at some point. So we'll have that we'll find a good another spot for it. All right, we have a couple final notes. We have a giveaway, a $200 Visa gift card for all subscribers as of February 28th. $200. We love to bribe people. And I just got an email from Elon Musk telling me that he has a surprise for me. I don't know what the hell he's talking about, but I'll tell you this, today's show really excited me. And if I was a woman, I'd be all over